We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. It's been a long time since we've done a public live stream. So, yeah, it's we felt motivated today because it's a really exciting and it's a really exciting day.
Let's pause. Before I want to make an announcement because this is the first time I'll be doing a stream since having my child, so I'll have you all know, and I'm not going to show my child that, but I have my camera here on my phone, and if she wakes up, I may black my screen out and run and take care of her.
And then you'll just have me.
Yeah, and then I'll come back when she comes down. I'll just, I got a hammer. I can just knock her out, and then okay, you're fine.
Oh my.
No, but just want to say that. But yeah, to what you're saying, exciting time in the market. Well,
it's not really.
Dude, 2022 was this 10 times.
Yeah.
It's 2018 was what? How much did it sell off in 2018? It was like Q3 into Q4, right?
Mm-hmm.
Was it 20%?
I believe so. Yes.
Yeah. So this is like nothing, to be honest.
It could be the start of something.
It could be.
What I think it just boils down to, and if we're getting right to the meat and potatoes of like what happened, what the hell happened, I think that, and actually, let me make sure I have the stuff I want to share later. But it's weird when I hear myself. But what I think we can boil it down to is there was a lot of the foundation of this rally was built off of, I don't want to say rampant speculation, but an elevated state of speculation.
I thought it was rampant speculation in niche markets.
And define niche for me so the audience can
like
page.
Crypto.
Okay.
You have like quantum computing. There were certain stocks, like we were seeing a lot of things. I think a good indicator was breadth of the SPY had been down like 10 days in a row, and the growth to value delta was like the highest in 40 years. So within the entire market might not have been super speculative, although it's funny because at first I was really excited on this stuff and I was like, oh man, I can't wait to buy things. And I was looking, I was like, everything's still fucking expensive. They're down. The stocks I want to buy are down 3%. Whoopee. But yeah, so that's what I mean. So let me think. Crypto, I want to say within AI and data centers, there was some speculation. I think there's a lot of pieces in there that had, one of the companies I'm short, for example, that, of like things like that I would say is very speculative to silly. You had the quantum computing, which is hilarious. That's the most funny one. Yeah, I mean, and then you had like the Trump trade that's just getting increasingly speculative, like Tesla, which is absolutely ridiculous in my opinion. Just like off of I don't know how you.
We almost doubled in what, a month?
Yeah.
Okay, so this is something that because for the context of everyone watching right now, if you're not in CM, we do like weekly updates, at least, well, maybe sometimes twice a week because you count ICOMs. And we were having these discussions. Well, I think this is mostly in the spontaneous voice chats that we were talking about. This was just like the progression of degeneracy that we were observing. and it was getting progressively worse and worse and worse and worse. And then so, anecdotal points such as, you're at the gym and then you hear the gym bros start talking about crypto, Tesla stock, and the old adage of like when the shoe shiner starts talking about stock tips, you're supposed to start to get a little worried.
I literally had someone almost say, like, to me, the direct tweet that like people make fun of Peru Sexena for, which is like, do you like accounting? Do you like accounting, or like, do you like making money? Someone said to me something like, "That's cool. You like your accounting stuff. I'm gonna buy stocks that go up," or something. I was like,
Yeah, no, and I recall there were some interactions we've been having with people that started to almost like they started to ooze out the idea that doing well is super easy. You just buy Tesla and it
well,
just goes up.
and the funny thing today is, I mean, the stocks that got hit the hardest were the speculative stuff. I mean, like,
Mm-hmm.
if you were long the speculative stuff today, hurts because like a lot of the speculative stocks were down 10 to 15%. So like,
And it's still too early to call that it's the end of that rampant speculation. But
my base case is you're going to have a pop after this. Personally, like, I think not a pop, like, but like, I think this might be the. It kind of reminds me of in 2022, which was not long ago. We'll all remember this. Jay Powell comes out, says, "Oh, we're raising rates more than people thought." The bond market reprices, stock market reprices down, and then it moves up until the next meeting. Now, the only difference is I think Jerome Powell is like a shock, but I don't think it's going to be like 2022. Do I know what it's going to be like moving forward? No, but
well, now getting into the details there, this is my reason why I think the market is selling off due to this reaction. When you look at maybe what the market thought was going to be the case, is that we were going to get more clarity. And just based off of the commentary, when you hear him talk, it's a lot of, we're doing this now, but we're not really sure what we're going to do next.
mm-hmm.
And so what do we always talk about? The market doesn't like uncertainty.
Yeah.
So,
and just so people understand, because this is a public stream, right?
yeah, this is a public stream.
So Fabio and I in the community, we actually have like a lot of discussion. It's just most of it isn't public because most of it is spontaneous voice chats in the community. And I think Fabio and I have been looking at this for a while. I mean, like, dude, we got a position for like the speculation to tone down. Like, you don't want to be in a bunch of speculative stocks right now. You don't want to be taking your pot shots. You want to be looking at like, and we kind of said this is what we want to look at. And I feel like it's going in the direction that we thought it would in terms of like the stocks that we think will do well if this trend continues, which is speculation pulling back. So like, as an example, you said this, and I've thought this for a very long time. I see and you see Bitcoin as a proxy. Now, this isn't the only purpose of it, but it's a good proxy for speculation, right? What's an excellent proxy is Fartcoin. And when that thing's up, you just know speculation's up a lot. But if Bitcoin pulls back, let's say 20%, and I don't even think that's uncommon in a bull market in Bitcoin. So it pulls back 20% to 80K. A lot of the speculative stocks are going to get smacked pretty hard. I feel like the way that and it's funny because we literally had like a portfolio, like I think you and I had a call and just like kind of went through my port and like reconstructed, what was it, a week ago?
Yeah.
It's like, let's get it set up for, I even said like 24 is over. Let's look at 25. And kind of went through that. And I feel like the setup was very well thought out and well done. I wish I shorted more, but
shoulda, coulda, woulda. But you're well positioned. I mean, I think like as a whole, especially when you look out into the well, this is more for, I guess, it's like I don't think they should be used as a comparison, but other people out there, they might be a bit more exposed to a downdraft than at least your portfolio. And the timing is also fairly lucky for me, but we'll see how that pans out, because I hope it actually kind of still shows a lot of weakness, at least till the end of this month in particular.
Mm-hmm.
And then maybe actually January if I'll get double lucky. So, but we'll see. We kind of just have to go with the market. It's what it gives us. But yeah, I just think the market sell-off right now, and to summarize, I just think it's just showing us or telling us as a form of confirmation, the run-up, in many cases, a lot of the violent run-up that we saw recently might be built off of shaky ground. And then you're kind of seeing that here.
Not might. Definitely was.
Definitely was. I mean, we gave it all up. Like, I think VTI gave up the like a month's worth of gains.
So one of the things that people have to understand, and we talked about this, 2 days ago?
Mm-hmm.
Record level lows in volume on the SPY. And so when you move up on record low volumes, it doesn't take much to erase that run up. Yeah, it looks good on paper, but you're built on very weak foundations, because your run up is just built on very few people buying, very little conviction.
Mm-hmm.
And so I think you had a month of run up on low volume, and one day gave it all back.
Mm-hmm. Yeah, that's all. And everyone's losing their minds.
Yeah.
Which is,
Well,
but
I think what it is there's a lot of people that are inexperienced, and maybe they're here in 2021, kind of went off for a while and came back somewhat recently, or are new to the market, or are speculators. I saw a lot of people very angry at Jerome Powell.
I saw that. Yeah, you share.
Yeah. Because their calls got clapped. Well, why are you buying a shitload of 1 month expiry calls that are, 35% out the money? I mean, I don't know what to tell you. It's just, I don't think this move is that much, really. I mean, even for my port, it wasn't much. It was okay, cool. I think I was down 2%. With Fidelity options pricing, it's tough. So you have to kind of calculate it yourself. And so my own calculation was between 2 and 2.5%. If you go off Fidelity's, it's 6% down, because they just take my puts and write them down to zero. What currency is that?
I believe that is the Colombian currency.
Interesting. Is that $3?
I don't know the conversion off the top of my head, but I don't think it's anywhere near $10,000. I don't have that memorized, but let me find out in a second.
Yeah, it's $2.30.
Yeah, $22. Oh, that's a pretty generous.
$22.
Yeah, $22. Pretty generous.
Dang. Why is everyone else
I added 10. Sorry, $2. It's $2.
So wait. Are we saying that Dr. Latina is a multimillionaire
in Colombia?
No, he is a multimillionaire. He is the wealthy class. He is the. So
we're not. I wasn't actually talking about you, Dr. Latina, with the Tesla comment, by the way. I think this comment
no, we weren't.
We're not talking about you. We're talking about others.
So, what did you have? What to buy and avoid stocks? Okay. So now I think for new investors, this might be kind of Because is this the biggest one-day sell-off since 2023?
I believe so. I don't think we
Yeah.
had one this year. Oh, wait. But
The
we
Japan
recovered.
day, the
Yeah.
carry trade day started down, but it recovered quickly.
Yeah.
I think it ended higher than this. I might be wrong.
No, I think you're right. I think, well, this is actually the largest sell-off on record, I believe, when the Federal Reserve had an FOMC meeting. I believe that was the record it broke, or at least it got very close.
Maybe it did.
And I saw that someone, when I came over here to the comments, someone talked about the quantity of 0 DTE options right here. 50% of all options are 0 DTE. And then the secondary comment followed that up is Robinhood has made everyone a gambler. Yeah, I mean, I think if we look on social media, we do see a higher prevalence, it appears, of people gambling with a lot of money.
It's really wild to me, like and I don't know if this is like coming to Wall Street, but I think it's something to remember. It is wild the short time frames that people have now. Like I'll tell them like, oh, I think this is dumb, and it goes up like 10%. Like, hi, you're wrong, you idiot. I was like, okay, it's been 3 days. Like, chill. And then something happens and it's down 15%, and they're like, oh, what happened? Like, well, you were buying something on nothing, and it's so. Yeah, I think it definitely very short time frames, and people are very wanting immediate gratification.
Oh yes, no, I mean that's some of the degeneracy that we've seen developing, at least at very much so in the last couple of months. But that was a huge theme. I think even second half of this year, it was starting to grow. But a lot of the, I was a big defender of the market move, and I think so were you. It's a lot of the move and the participation was due to earnings growth, and then something not broke, but somewhat it was different. It did change about a month ago. Now maybe that's now gone, and then we can get back to more fundamental based growth, or maybe this is more going to be an exaggerated sell-off and it's just a start. That's impossible to know for sure. That's impossible to really know. And if you knew that, you'd be probably one of the wealthiest people eventually, just consistently doing that.
Yeah.
So kind of like what we've kind of shifted, right, as far as emphasis for a while now was which one?
The comment from Big Pharma is funny.
Oh. SPY's up 62%. Yeah.
Yeah. So bricked on gold. Interesting. Okay, so what were you saying?
No, that a lot of the unknowns is like where or how severe the sell-off's gonna be. It could be that we bounce back tomorrow, right? We could have a little bit of a bounce tomorrow, and market kind of calms down. Because at the same time, what I really look at is none of what was really given or happened today was unknown information. The only thing that was unknown was you could call it the forward guidance of the Fed. But you know how I feel about the Fed. You already know how I feel about it.
Yeah, and I share a lot of similar thoughts, although maybe I think they have a little more credibility than you do, like a little bit. What I want to know is, was the sell-off today still low volume?
I'd probably say I didn't actually check that.
I mean, it was double yesterday's volume.
But we were already in a low volume.
Right, exactly. So it's like
we're not seeing much participation.
Yeah. I mean, it wasn't like low volume for sure. Like it was a legitimate, it was a decent amount of volume. Like, look at this here. I'll send this to you. Or actually, I can just share my screen, maybe.
Yeah, share your screen.
All right, can you see it?
Yeah.
This is just on the SPY here, and you can see kind of the volumes here. And you see how like throughout all December it was really low, like
Yep.
low 30s. Then it was like 43.55, 107. If you go back to like, let's go back to June. I mean, high 30s, low 40s, low 50s. So what you're looking at, 50s, 60s. So it was a solid volume move, but nothing crazy. So it's a 3% move. I don't know. I mean,
It's not even that severe.
it's
just that
3%
some people bet the farm.
Well, going back to your point, we have so many gamblers now. I'm just trying to think.
Well, we know that one guy lost maybe around $750,000 just today.
Yeah. There is, I think what's happened, there's like this element of keeping up with the Joneses. It's like the FOMO or the comparison.
Mm-hmm.
So if you compare yourself to anyone on any time frame, like you're going to find someone that's doing better than you.
Mm-hmm.
And so people do that and they don't realize what's happening. And they sort of themselves get into like, I need to be more aggressive.
Mm-hmm.
I need more leverage. I
Yep.
need XYZ. I'm sitting here and I'm like, when we were talking about this, I'm like, I made 55% this year. I am okay with making 55% and more than double the S&P 500. I don't need to go. And because there is a level of risk you have to take to get 100%, to get 200%. You don't just get there. I mean, you can. I mean, I guess if you bought the right stocks, but even then you're probably concentrated in a basket of stocks that are very volatile by definition. And so what people do is they start to say, well, I got to take on more risk. Look at the money he's making. Look at this guy that's doing leveraged MicroStrategy ETFs. I want to get into that. So I'm going to buy calls on MSTX. What could go wrong? Oh, look, I'm up $100,000. Next day, oh, I'm down 300,000. Fuck. Like, and so it becomes less of a, what do I have? What's my 30-year goal? And it becomes more of like, I want what he has right now. And that's all it is.
Yeah, and I think the same thing. What you said is how I feel. I mean, I care. Even though this year has been phenomenal, I care more about how I'm doing in the 5-year. And for example, I think I've talked about this in the past when we were going through the performance. One of probably the greatest things that helped with all of my performance was the positive returns that we experienced in 2022.
Mm-hmm.
So you kind of see the compounding effect, and then that drastically changes the difference between the portfolio performance versus, let's say, the market.
Yeah. So one of the things that like I'm challenging myself is it's pretty easy to do well in a bull market.
Well, I wanted to say, you recall we've had this conversation before that in 2021, I underperformed in 2021.
Right.
I did. I underperformed in 2021. Yes. In 2020, I barely had outperformance. 2021, I underperformed. I think I underperformed by maybe, I think it was like 4%. I'd have to check.
Mm-hmm.
But 2022 was a differentiator. And then in 2022, coming out of that week, basically, kind of had that whole discussions. And we all lived through it, basically, where there was so much fear, right, in these various stocks that were just dumped. And then we can kind of make the, I guess, logical leap and say, maybe it's a good risk reward to actually allocate heavy into these stocks. But a lot of that in 2021 was just like recognizing there was a bit more rampant speculation. I mean, it didn't take someone with like a insane IQ to look around and say, hey, this SPAC boom, these unprofitable stocks trading at these levels, these meme coins doing really well. And it's not that it repeats, but it rhymes. And that's kind of what we're seeing now. And again, I don't know if this is the end. So we could be talking too early. Tomorrow it rallies again. People come on here and say, you guys are stupid because poo poo fart coin is up or whatever they're into.
But the thing is if they did that, they would just be making me right, because my point is you're looking at a 1 day time frame.
Yeah.
Like, take a step back and really look at your portfolio and say, like, how many people actually look and say, what is my downside risk on this? Like, what is the risk that this blows up? If this stock pick goes wrong, I saw a guy on Twitter, he posted today, he's put his parents' retirement 100% to 50-50 split of MSTX and MSTR. That is some of the most irresponsible shit I've ever seen in my life. Like, because your downside risk is zero. That thing, especially MSTX, could zero out. And someone, I put in the community, someone said, you're risking, because he calculated 30 years of work for your parents. He goes, you're risking 192,000 hours of your parents' lives going to zero.
Glad it's not my parents.
Right? Well, it's funny because I managed the portfolio for my parents, and like, it's funny because it's outperformed this year. I think it's like up 30%. It's very unvolatile. Like, the thing that I talk about in that is control the volatility, because in volatility is maybe a proxy for risk. I don't think volatility is risk, but it can tell you the market's fairly certain about what you have in there. Like, just speculation. I guess I'm going back to, like, people need to take a step back and be like, 5 years from now, how could what I'm doing go wrong? There's a really good Howard Marks. Leave that one up now. But Howard Marks had a really good podcast, and he talks about what is risk.
Yeah.
And there's some other people that have defined risk, and they've kind of said the same thing. They kind of say risk is the number and variance of outcomes in a given investment. And like, in the podcast, he goes through, it makes a lot of sense. He goes like, if you buy like S&P 500, there's a pretty low risk of much happening other than like maybe you have a sell-off, but it goes up, right? Like, more than likely, yeah, you could have a 30% sell-off. You got 40. There's a low risk that the U.S. just blows up and you go to zero. You buy a single stock, now what could happen? The CEO could be embezzling money. The software they have could become outdated. A competitor, a big player like Amazon or Microsoft, there's so many variants of risks. And people don't think through this when they're investing. They're just like, well, if I buy this 3x fart coin ETF, like, it could go up a lot. And it could also just implode and go to zero.
Yeah.
So, and the reason I'm saying this now is, like, if we have a correction, this is nothing. Like, this 3% sell-off, it literally is nothing. Look at Laker and Forrest comment. But
yeah.
So,
and by the way, I just want to state it appears as though we switched from more greed to panic almost at the switch of a light switch almost.
Yeah.
And part of me, I mean, I am going to, like I said, I have a windfall that's coming in, close to the end of this month, and then bonus time is Q1 of next year, so right after the year end. At least that's how it works for me. So I hope with the timing it lines up with that, but I'm gonna be deploying some of the cash I have here over the next couple days or so, weeks or so. And I mean, for me, it doesn't really change, because I'll say it this way: for 2022, this time around, because there's no dodging Meta. There's no dodging Meta. I'm not kidding myself. So like, if 2022 repeats, and not in the same way, like it's gonna rhyme maybe, but like it's not gonna be maybe the Meta moment where it goes all the way down to like $80 a share. But let's say Meta has a pullback with the broader market. There's no hiding from that. I'd have to pull like dark sorcery to actually come out positive. For real.
Well, and you're saying like if Meta went down to 88 again or whatever.
No, not even. Like, let's say Meta has like a 30% pullback. There's probably not a realistic scenario at this point, because Meta has grown so large. Now, I'll never get to my basis, but it's just not, and I don't really care to hedge it.
Yeah.
If I'm being honest. I'm not retiring. I don't need the money. So I'm still grinding to build it. And so I'm not there yet. But the best we can do though is kind of, with net new capital, try to focus and funnel it down into stocks that we think, or investments, not necessarily stocks, but investments that we think can do well in any environment. And then I wanted to kind of play this war game with you. Just for the public audience, we can kind of go through different sectors and kind of start to think about it. But let's say we were discussing this off camera right before we came on here, and we both kind of, I think we agreed that the let's say REITs, we see a lot of scenarios where they may not still be that good of investment. I've been clearly fairly early to the REIT rally, and so that hasn't, a longer term, really changed my mind as far as like the discounts to NAV, etc. But if I had, for example, allocated a huge portion of my portfolio, it wouldn't look too good. But I'm still like have an affinity, let's call it, for that play. So I don't know exactly when they're going to have the day in the sun. I know that eventually they will. And so they still remain in my port with some exposure, but it's been one that's at least until now has been patient. But we've been talking, for example, let's say we have deflation. We were talking how that's maybe not a good scenario for them. Higher for longer could also not be a good scenario. So there's plenty of ways that they still are laggards within the market.
Yeah. No, there's so you guys are saying how REITs, are you asking when you're saying you say battle, what was the word? War planning? War gaming?
War planning, like war gaming, yeah.
Okay. So are you asking me how I feel about REITs? Or how I plan on REITs?
No, we can go off to sector by sector, kind of just like play it out. I saw someone mentioned energy. Like, do you like energy here? I think I know where you stand on these things, but I'd love to still hash it out in front of everyone.
So I think energy is just tough. I think anything commodities, materials related is tough. I think in general, we've been in a band that kind of oscillates between 65 and, you can kind of tick 90 at points. I'd say 65 to 80. I have a hard time like just being an oil investor. Like, I feel like you trade it based on where crude's at. I think it's difficult to trade unless you're a specialist. So let me back up and say I'm a generalist. There's guys in the community who are like energy, commodity, all that specialists, and they find gems of companies that you can go into. But if you're not a specialist, like, I think I wouldn't go into energy. I think there's like a group of sectors that if you're a generalist, you should stay away from. It's like healthcare. Stay away from if you're a generalist, because you just don't know. Biotech, pharma, stay away if you're a generalist. Energy, materials, I would argue semiconductors as well. I'm sure there's others, but so I'm not a huge fan of energy here as a generalist, or materials. Speaking of which, top signal. There was that guy on Twitter, Calvin Froedge, who literally sold his. He made a post saying he was frustrated because of like these stupid paper companies, he called them, just going up every day. So he sold his entire account yesterday and was just like, I quit, basically. I'm done. Which might have been a great move because he's probably outperforming all those today. But basically like him giving up. That's kind of like a top signal a lot of times.
But he was long like commodities and stuff.
Yeah, he was. I don't know. I don't follow him much. I like looking at his account sometimes because I think he's like schizophrenic, but he's just entertaining. And then really quickly, someone asked a question. I'll just address it real quick about Amit losing $100,000 today. I think it's irrelevant to like think about that unless you know the size of the person's account. So he was in Palantir. He could have made a lot of money. I don't know what size his account is. So it's really like if Bill Gates was like, oh shit, I lost $100,000 in the market today. It's like, okay, well, you're worth billions of dollars. I don't think that really matters. So I think it's irrelevant to, and I don't follow him, so I don't know what his.
Yeah, well, I guess the follow up was like about account size and all that, and it's saying unless his portfolio is $1 million plus, we can't comment on it because we really don't know. But if his account isn't over $1 million, then I guess there's some options play that didn't do well.
Or he was like long MicroStrategy.
Or that, and again, like we just saw someone with not an insignificant amount of money just like blow up $750,000 in likely permanent capital loss.
Potentially, it's difficult to, and I think almost pointless to even like ruminate on it because I don't know what he's doing. I don't know his strategy. I don't know how big the account is. I think he's done fairly well on YouTube. Like I think his streams, I don't know how much money it brings in. Who knows what's going on? So, but back to, so it's really hard to give any opinion without any of that context.
Yeah.
So back to, I will say, my account is not big enough where if I lost $100,000, it would not be a good day. If you know the size of my account, it would not be a good day to lose $100,000.
I think even for me, 100,000 in a single day, it would be, that's not like nothing.
No, but the other thing too is, I don't know, like
that's an abnormal day.
If these are options that are expiring on Friday, yeah, you just lost $100,000. If this is your long sum stock that just like had kind of a left tail event and you think you'll recover it, then it's just paper.
I think today in the holding co, it was down like 50, but which is an abnormal day.
Are you okay?
I'm okay.
Okay, good. So, okay, so actually, I think in some ways it might be a testament, like, good on Amit, because I don't think he had an account that could have lost $100,000 a couple of years ago. So good for him. But so we were back to sectors.
Yes.
Okay. So do you want to go through sectors you like?
Yeah. Let's go through sectors we like, because
okay.
let's avoid the sectors we don't like, because people probably don't want to hear us say, "Oh, we don't like this. This is not enough."
So, and I guess it's actually funny now we're talking about it. I don't know if we like. I have specific sectors I like. I have a theme I like, and there's a theme.
Let's go with broader theme. That's okay. Probably better, because same here. I just not really. Well, I guess I could point out a sector I think could be attractive. But...
Okay. Sorry. If you guys see me looking down, I'm looking at my camera because I get like phantom, like child noises constantly. You get this like. Anyways, So the theme is cheap companies that I think are decent to high quality, that are doing something about how cheap they are. I would say they're mostly high quality. That are doing something about how cheap they are, that have recognized there's something off with their valuation and are working on ways to expand that valuation, or to use that valuation to their advantage, so like stock repurchases, things like that. And so that's really how I set myself up going into 2025. It's a Google cheat. But that's the theme that I like. So I guess there's two actually. It's just straight up OP companies. There's a couple companies that are just like, yeah, they're a little high valued. Even there's my largest holding, which we've probably talked about before, but I don't know if I can really say it. But my largest holding is really high beta. Like it'll probably, like, on a day like this, it's going to be down more than the market. I don't really care where, like, that stock over time is going to just trend up. It's either that or stocks that are cheap and recognizing that they're cheap and doing something about it, that are high quality companies.
Yeah, because at the very least, like, if you're trading at, what you're describing almost is like high earnings yield, relatively high earnings yield, and I say relatively because maybe the earnings yield is maybe low in the current term, but it's going to be higher in the next year's term because they're growing a lot, and the company is recognizing that value, and then they're doing something about it, i.e., share repurchases and the like. So you do have some companies out there that definitely are exhibiting that. And in times like this, when you have increased volatility, when you have to the downside, you have the opportunity for them to do even more share repurchases. And that should, in theory, over a longer period of time, springboard your returns. So yeah, I mean, we're on the same page there because we've literally been talking about that.
We really have.
So it's not, there's no debate to be had there. But I guess then maybe we do go into sectors that we might not want
Tell
to
you about
touch, or
sectors that I want
themes.
that I've been shorting.
Yeah, go for it.
So I'm trying to think one is, because I thought we were going to hire for longer. So one is, like, what I've been doing is looking for companies that are burning cash, that are going to need either a capital raise or refinancing on their existing debt soon. Because you're going to run into a scenario where either the market doesn't want to give you money, or if it does give you money, you're selling, like, it's just difficult. Like, you're not going to be able to do it. I have that. Kind of the sectors that we said are a little frothy. So, for example, actually, I guess AI data centers, I'm not as exposed as I was, but I still think that's a theme that'll do well. I don't know, I'm not like an NVIDIA bull necessarily, but I still think that theme will do fine.
Yeah.
That being said, I think within that sector, when you have such a hot sector, there's froth. There is people who come up who realize that the sector has a lot of froth and realize people want to get in the sector, maybe disregarding the quality of your company. So, for example, you have the SMR nuclear companies that are coming up. All trash, in my opinion. You have, like, different, I don't want to get into it because I don't want to give away, like, my positioning, but you have different small players that I think have no competitive advantage. They have no experience in the field. They realized that this was a hot sector, and they positioned a company to be able to receive capital by being in that sector. So basically, people that are taking advantage of froth in markets and using that to their advantage. and then just absolute shit goes. Like there's a couple that like one did a reverse split. I've been wanting to short it for a while, but it was such a small stock price. I was like, damn. And then I saw, oh, reverse gift is a gift. So there's that. And that's really it. Okay. Can I ask you, there is one company that has gotten crushed. And actually there's, I think, another one in there that I think is also getting crushed that I want to talk to you about. You know more about this sector or about this market, and that's Nubank. What is going on there? They're down 11% today. They're down at 1040.
Well, okay, I think it's multifaceted. The main reason, I believe, has everything to do with at least the starting of the weakness was turmoil in Brazil.
Sure.
So for some context, there is, and I'm going to spare the details, honestly, because I haven't well versed myself in the nitty gritty stuff that's been going on. But I know, just as surface, or I consider it to be surface. Maybe for some it might not be as surface. But for there's many political factions within Brazil, but right now the two most prominent are the faction of Bolsonaro, the former president, and Lula, PT, who is the current president. And there have been some maneuvering to sort of, accusations by one side that one side did something, and then actions taken by one side to try to arrest the other. And so just
a quick question.
Mm-hmm.
So it didn't happen for Trump. I think Trump's not extremely unique, but somewhat unique in U.S. politics. But typically in U.S. politics, someone runs for president, you lose the nomination, you don't really hear from those people that much ever again. Like Mitch McConnell lost, right? That's who it was. Or no, John McCain. Yeah. John McCain lost. Didn't really hear from. Al Gore lost. Like, doesn't, in Brazilian politics, is it different because Bolsonaro, he lost, but he's still relevant?
Well, to be yes and no, but yes. I'd lean yes. To the spirit of the question, I'd lean yes, but I don't think in like necessarily the same way.
My question was going to be why, Trump. So I don't know. I guess you could.
It's just that he represents right now one of the main opposing factions.
I know John McCain is dead, but like this was from like 2012 or 2008. So like after that point, is what I meant.
And you're also laughing at John McCain's it's just getting worse,
Okay.
So it's not like that the same relevancy. I think more recently it's become even more relevant or top of line because of the accusations levied against him by the sitting administration, and then the sitting administration attempting to arrest him, for example. So yeah, that's it. It gets really complicated, and I'm trying not to even provide a political opinion or view on it. But
I'm just trying to get like an understanding of the background, to understand how that then impacts like Nubank and why they're getting crushed.
Well, that's just one reason. So like I said, that's the main reason why, you're priced for a story, and you're exposed to a market where that's where a lot of your earnings are derived from. You have Mexico, that's this growing market, but Brazil's, your main market. And so suddenly you're going to throw in a whole bunch of political turmoil and questions. Of course, it being a foreign stock, typically you do see a greater sensitivity. We've talked about this with other stocks that we've mentioned or discussed and researched in the club, that if you're trading on a foreign market and you are a foreign stock, the sensitivity to any sort of political developments tends to be higher, just because of a variety of factors that we can attribute to, just kind of general lack of communication. That can come from language barriers, just different. Well, that's all kind of related to that, but news sources don't really sometimes communicate well. If you're using Western media to try to figure out what's going on in a non-Western nation, sometimes doesn't really get the full information across. So that a greater sensitivity can, we can kind of point to Nubank and say, okay, that starts to make sense. And then in addition to that, we probably also are seeing on a relative basis, Brazil is looking less and less attractive to invest in versus the United States. And that's kind of stemmed from a lot of, especially post, Trump presidency, when a lot of capital just flooding into the United States. While Nubank does have a listing here in the US, it is still considered, and still is, a foreign stock. So, and then same thing with Mercado Libre, which, also, so someone's asking about that one too. It's roughly, at least the first pillar of the reason is the same: uncertainty in markets like Brazil. Although Mercado Libre is probably a more holistic picture on Latin America, but there are also some other developments. And on top of that, let's face it, with Mercado Libre, the price, right, what you're asking for in the valuation does almost like not accept any questions to that story. So as soon as you have some questions, don't be surprised that there's some exhibited or elevated exhibition of volatility. But
so basically political risk ended up,
you can stem it right to political risk and US's OP if you want to. Just two sentences.
Nope, that's fine. I mean, and that's a struggle, because my assumption is like they'll be fine long term. This is why a lot of companies I don't invest in, because I'm like, I don't know the market. Like, I don't know what's going on there. And it just makes it difficult for me to invest in that, because it's like, how am I going to invest in Brazil when I literally don't even know? I know that right now it's Lula, and before that was Bolsonaro. Or Lulu, or what? Lula,
yeah.
Okay. And before that, I don't even know who the Brazilian president was. If it wasn't for this last race, I wouldn't know either of these guys. So like, I have no interest, investing in Brazilian equities without even knowing that background, right?
It was Dilma.
Well, now I know that they were run by a Jew.
No, she's a woman, but from the same party as Lula.
Dilma?
Yeah, Dilma.
She was from Lula's party?
Yeah.
So are they every 4 years like the US, or how do they work?
Oh gosh.
Don't worry about it. Elections are weird. Like, you have like the French where they just like can like call elections, or I think it's the same in the UK. Oh, Ben, you need to chill, man. So, but I think it's the French and the UK. They can just like call snap elections. Stop gaslighting me, Dex. I watch my boy Martin every single day. Oh wait, no, I don't know if I'm assuming he's Jewish. I don't know.
This is a hole, and it's getting dug deeper
Yeah.
and deeper.
Thinking myself full. Okay. So, what was I going to say? No, I just don't understand like the political environment. So how do you invest in a country? I understand the political environment in the US well enough. I understand it in the UK well enough, which a lot of the US political system was built off of. France, I know there's the French common law that I think is in Louisiana. And you can kind of understand that a little bit, although you don't understand the culture that well. Yeah, I think that's it. Just try to invest, I guess, in places where you understand the government at least a little bit, and even where you do. That's why, I have some UK company investments, and you can get screwed because you don't understand the environment as well, because you're not there.
The business culture. Everyone sleeps on the business culture.
The business culture. People are like, man, U.S. equities are so expensive compared to everything else because we have the best business culture, or at least we have the most shareholder-friendly management teams, I think.
Well, you know where it stems from. It stems from protections of minority shareholder interests. So that's something where people really sleep on that. It's like not all countries are built where they protect the minority shareholder. So in some jurisdictions around the world, you can be, the smaller guy owning less shares than me, and I can just bully the crap out of you. There's not really anything you can do about it. There are, it's not unavoidable here in the United States. Like I can think of several companies where, the problem really is the management, and the management owns a majority of the shares, and they control the company. And like, that's actually like the problem. Otherwise they'd be able to unlock tons of value. And not like quick, I'm not talking about quick smash and grab value. I'm talking about literal, longer term value where the share price could actually do really well. But we do have a lot of really strong protections. So that does make U.S. equities a lot more attractive. And some Western countries emulate that a lot. So I'm not saying that that's not found anywhere, and then therefore they should be discounted. No, it's just like, but it is a case by case basis, and you got to ask yourself when you're looking at a country, is that the case? Yes or no? So
right. So that explains new then. Thank you.
Yeah. So like there's probably a lot of, I think there is a lot of opportunity international. If we're talking about areas where there is opportunity, I have a few now. I'm pretty, maybe not by weighting as much, but obviously because there's some, outsized players. But I do have a decent chunk now of international exposure, and as of tomorrow, I'll have one more. So we'll see. Yeah,
I held a gun to Fabio's head and I was like, buy this.
No, well, it will be the, second go around.
To be fair, you did it beautifully. So
hey, sometimes
portfolio balance retiming luck,
or more like I'm not sure about this.
Portfolio rebalance timing luck. I said that wrong.
Yeah. Well, no. What we're experiencing now, or what I'm about to experience, is portfolio rebalance timing luck. That Bacon always loves to talk about, but that's more of a different consequence. That is a little different.
Yeah, but is it really that much of like luck? You might get like a 3% discount on something that's running up 50%.
You know what? I was a little happier until you said that.
Yeah.
And now, but no. Wait. Whoa. What are you talking about? There's some stocks out there that are on the shopping list that aren't up 50%.
Yeah, all mine.
Yeah. Well, not all of yours, but because like you have, but
yeah, no, I'm just teasing.
Some of your foreign stocks for sure. Yeah.
We don't talk about those things. Oh, my daughter's phone. No. But
no. I'll go ahead, and if any of the Bacon, if you wanted to come on, I sent the link on. All right.
Yeah. So, hello Stabulo, by the way. I love the emoji.
Pow. Wait, I gotta pull it up. He's got the bam. Andrew loves the bams.
I do.
I think most of the semiconductor. Okay, so this is good to talk about semiconductor equipment stocks. Like what are they on about? All right. Here's the. Oh wait, I have to change this up. Here's the portfolio rebalance timing luck reminder. Actually, you know what? Big, is that your? No, change your name.
What do you
Rebalancing
mean?
timing luck reminder.
Okay.
I need. That's who you are today. I think that
was misspelling. I still got to represent Andrew in my side project, even though it cuts off. Screw it. Yeah, it's -2A1G, but it's cut off. Yeah, there we go.
So yeah, the comment we just had up. I think most of the semiconductor companies will get crushed in 2025, except for those really engaging in the high end and AI related ones. Okay, I don't know, but except I guess I'm positioned in that because we've talked before in various live streams. We've mentioned briefly earlier in this live stream. The AI data center theme is still strong. I mean, let's not call it AI because that always gets the bad connotation. But let's call accelerated compute, hypercompute, high-end compute, however you want to call it. That theme is still going strong. There's still a lot of capex going into that, and so yes, I would tend to agree. But I don't want to dismiss that the low end is going to do terribly, but I agree that the high end is going to do, for the foreseeable future, do well.
Yeah, I mean, I don't.
You love this sector, I know you do. You just like.
No, I think you need to know the industry better than most people that are most retail people investing in it. I think there was a complete shift within the industry in 2022. And I had an okay read on it before that. And I feel like when that happened, it kind of dynamically changed a lot of the ways, like the players, who is who and everything. And I just was like, all right, I'm not up to date on this industry anymore. So.
Yeah. And by extension, I know that, what you just said. Now you're going to say, well, same thing with this, but the equipment stocks.
Isn't
and again,
more?
What? No. That what you just said also applies to them. That yes, you kind of need to be more in tune with the cycles, etc. But I think some of them look more and more attractive here. In particular, I've been kind of circling as a shark around ASML, building a smaller position, selling some puts. Well, I just gave away at least maybe some ideas of sizing, but yeah, so that's kind of how I've exposed. Oh, by the way, everyone watching publicly, I filmed a Crocs video. I never released it. I completely forgot to release it. It's like literally set to go.
Oh, just release it. It's still fine, I'm sure.
Yeah, no, well, it hasn't moved too much, but the video was filmed while Crocs was like in the 90s, so it hasn't moved too much, and everything I said in there is still relevant. I'll actually
we're $6 above the 90s. I don't think it's that big of a deal.
Yeah, it's about the same price. It's about the same price.
Yeah.
But then we had all the vacation era going in. So yeah, I think with themes that we like, I guess that I'll pass the book off to Bacon since you just joined. Well, Reminder. I'm sorry.
Reminder.
Joined. Is there a theme that you are, finding yourself attracted to?
Boring, because I just be repeating what you guys all said.
Yeah, because we're all like preaching to ourselves.
Reasonably doing something about it. And bonus layer is if I think you have like some element of some sort of quality or some sort of moat,
I think,
for lack of better words, and boring.
I think the biggest difference between us all is that I'm like the one that's like the short seller. That's the general.
I don't know. I also.
Oh yeah, I did get you. Yeah, that's true.
Yeah, I was gonna say
I threw Bacon a pitch. I was like, "Here's 3 things," and he was like, "I'm in." I was like, "I knew if I told you these 3 things, you'd be in."
Yeah,
I was like, "Boom, boom, boom." He's like,
we've been collaborative and we have opened Pandora's box,
and that has gone very well so far. We'll see how it continues, but I can tell about one of the shorts that I'm currently in. Currently, I think I'm down. But I'll just talk about it. Is I sold credit spreads on QBT.
Oh, good old quantum computing, putting money where your mouth is.
So basically, yesterday and today they opened up new options. generally on these stocks that have this high of an IV, that's a time to look at selling some credit spreads. You have a defined risk, so like this isn't something where you can Disney and Google analysis. But if you wait usually for this to happen, you have this thing spinning at a 500 IV. You have, because what's happening is like there's a squeeze and just like people aping in, and then you're having probably a gamma ramp. And generally, that stuff starts to fall off, especially on options expiration, because you have well over, I think it's almost 25,000 options that are expiring this Friday. And think about this, those above $30, I'm sorry, you have 25,000 options that are above the $30 strike that are expiring this Friday. Those options opened up yesterday. Now, actually, let me double check open interest on that, because the volume today was 25,000. Maybe some people opened and closed. But point is, usually, you have a company that's currently trading. I did the math. They're at about 10,000 times revenue. And their revenue was, the last quarter, had a gross profit margin of 8%, negative operating margin of a lot. And so like these aren't fundamentally running. So that's kind of how I approach that. So there's your like really boring. Yeah, like quantum computing is really far away. These companies are running up to, like, it's so funny. They're not running up on anything fundamental. And it's someone said, I think it was, there's a Twitter user who I follow who I like a lot. His name was like Jaguar Investing or something like that. And he was like, why didn't they sell off when, like, I'm surprised these things didn't sell off when the market turned. And I was like, why would they? These things aren't running on anything that's logical right now. These things are just running on like complete hype and euphoria. So that's my short. Sorry for putting you all to sleep, but I'll hit you with that one.
I appreciate it. I think like me and a few other people will appreciate that.
Well, yeah, and because these things are so hard to, I think, monetize. Where you look at this and say, there's no way this thing stays this elevated. Like fundamentally, it can't.
And then it does for a little bit longer than you think sometimes.
It could be a little bit longer than I think, but even if it stayed elevated at the after hours level that it's at, I'd be fine. Like at 23.17, I wouldn't care. And if this management team has a brain, they're going to do an equity raise.
Dilute.
They already did one at $5 a share. They did one at $5 a share.
You know what short really worked out in the end?
Which one? Because we've had a couple, at least a couple.
All of them except for one.
Yeah, but it was the one I brought up, and then some members were in it, and then gave up too early, but it ended up working out.
What's that?
Did it finally die?
Moo.
Ah, yes. Yeah.
Double moo.
Yep. I know what you're talking
There
about.
are two moos.
Yeah.
Andrew's like thinking, the farmer has two
Cows?
Yes.
Yeah.
Oh, no.
Yeah.
No, I that was one that I actually held on.
Poor Dex. Dex salt in the wound.
That one worked out very well for me. I actually covered to actually about the same price because it rallied a little bit and sold off again.
Oh yeah, that's a shitcode dead company.
Think about our shorts. Even Sand has worked. Just had to give enough time.
I'm just glad that, like, thankfully through collaborative efforts with some very nice people, you guys are definitely counted amongst them. And
not nice
others not here. Like the position or portfolio management and allocation really, really matters if you choose to do this. And yeah, that's like, thankfully I haven't gotten my face ripped off by recency bias, and have acted accordingly. So,
Yeah.
yeah, I hear you, Dex. I decided to take my ball away on 2 cows, but yeah, I certainly see where you're going for that.
Yeah. Usually with a lot of these companies, I think it's actually easier. Like I do a lot of work on the shorts before I go into them a lot of times, but it's almost like they usually work out. You just have to be able to hold on. Like,
Yeah,
we couldn't hold on to one of them. We made the right decision.
Yeah.
We would have gotten called if we
that
didn't.
would detriment. Yeah,
And that is such a one-off. Like, I wouldn't say it's such a one-off, but that's what you have to prepare for. If this happens, will I be okay?
Yeah.
And then, so it's a good learning company or learning thing. Public farming company studios. So I guess this is technically a year-end stream. That's not really what we set it up for. We talked about the stock selling off.
Mhm.
Kind of talk about what to buy and avoid, and crypto and retail confidence. Did we not? Or did we not talk really about crypto and retail confidence? Was there some charts you want to pull up, Fabio?
For
anything.
I
No,
thought
we
I
already
heard
kinda
some of
talked
that.
about-
Yeah, like
Okay.
like Fartcoin got mentioned, Bitcoin some, and retail overall. Retail.
Well, we wanted to talk about crypto, retail.
Let's do it.
It's like, yeah.
Okay.
So let's begin with Bitcoin. Right,
Okay.
Bitcoin hit new all-time highs. Not today, but since last live stream and this live stream, it's hit a new all-time high.
Yep.
Oh, she wake up?
No, she's just cute.
Oh, okay.
Oh,
That's good. All right. And I think like when we're kind of reflecting on this, it's again like we were saying, it's not like a spitting mirror image of it, but it just rhymes a lot. It jives with a lot of the themes and the vibes that you got from roughly where we were in 2021, 2020. And I think if you deny that there's rampant speculation, I don't know what you're looking at, man. There's just so Bitcoin. I think we both. I've covered Bitcoin in the past as like at the most I'm a sideline cheerleader, right? I'm never probably gonna buy Bitcoin, but
I don't think you're a sideline cheerleader. I think you say that to be nice.
maybe. Maybe.
I think we've covered as a currency, Bitcoin's terrible.
Yeah.
So I don't think you're a cheerleader of it as a currency.
yeah,
And-
the academic definition. Yeah,
I know, and I've maintained this point. I think like the vast majority of people who buy Bitcoin, they're not even viewing it as that, because they always quote it to me and they conceptualize Bitcoin in USD or in fiat. And so all that tells me is that your end demand is fiat.
Mhm.
So you're looking at it as a means to an end to acquire more fiat. If you truly viewed it as sort of this form of currency, your whole goal, and you'd probably exhibit this in life, that you wouldn't want to hold any fiat. There'd be no point to holding fiat, because you'd say, this is not currency. These fools out here selling me the real currency for this non-currency. I'm just going to put everything I have into the real currency.
Right.
And then I don't even care what fiat currency you quote me, right? I have zero regard for it. There are some people who are like that. I met people who are like that. I think those are like true Bitcoin maximalists. Like they truly believe it is a
even like
currency.
Swaggy Pigfig is asking, like, what else are they going to price it in? See, no, you're asking the wrong question if you actually believe in Bitcoin as a currency.
Yeah.
What do you price US dollars in?
Exactly. I don't price US dollars.
Like,
Big Mac index.
Don't. What are you talking about?
Yeah. So, well, the other thing too is having a limited supply of a currency is terrible.
Oh yeah. We've been there before.
And you can say, yeah, you can divide it as many times as you want. Doesn't matter. You have a limited supply. The top 1% of Bitcoin holders own over 90% of the Bitcoin.
But
That's
it's
worse than like
democratizing.
France before the revolution.
Yeah,
But it's democratizing, Andrew.
at the end, if you do have, if you end up with like a finite currency, because like one of the things that is needed in like the best form of currency is expanding and contracting supply. And first of all, like Bitcoin people usually have like the complete wrong idea of like how currency is even created. They have, like this simplistic view of, money printer go burr. I'm generalizing. There's probably some out there I'll have a conversation with that don't think that.
Mm-hmm.
But yeah, for the most part, at least my experience has been just that it's not it's usually a lot of the same talking points, and the arguments made against fiat I think sometimes are misguided. And let's not get into like Saylor, because Saylor said some absolutely silly things, like really silly things.
I think he's a bad spokesperson for Bitcoin. But
yeah, if I was a big Bitcoin maximalist, I'd be like, okay, that guy doesn't speak for me.
Right.
Because some of the things he said on even like the Valuetainment podcast, if you guys have seen that episode, it's just like however long of him talking. It's just a lot of
is that Patrick Bet
misinformation.
David?
Yes.
Okay, yeah.
Yes, a lot of misinformation. But okay, so even if we accept it as like a form of currency, because it's not a dynamic supply enables that creative function. And so it's not a zero-sum game. But as soon as you limit the supply to a fixed amount, it actually then does become a zero-sum game. You will have at that point, at the end state, inequality like you wouldn't believe. Like because it would just maximize to the point of who drives the greatest economic efficiencies, and then who then maintains the scale that then self-perpetuates the economic efficiencies. What I mean by that is, like, think of it almost like, first of all, in such a system, lending a loan in a fixed currency would be extremely dangerous. For me to decide to loan out money or borrow in Bitcoin, so lending starts to become a little bit more complex, and that is the point of which we are really kind of getting into the meat and potatoes of like how currency is created, through the Eurodollar system. It's through these various, let's call it, vast array of financial institutions around the world that can create dollars. And it's not centralized like many people think. The US dollar is not centralized. That's what makes it actually so powerful. It's bedtime. And the way that we kind of look at, or at least what the arguments are pushed against fiat is that, okay, it's this highly centralized thing. It's not really. It isn't really. It's very dynamic. It's very adaptable, and that's what makes it always and has been really attractive as a tool, because that's what currency should be. It's not a way you get rich. And so going back to it, people aren't using Bitcoin as a currency. They're using it as a way to get rich. And I know that you've said that. I kind of jokingly call it poverty tokens. The reason why I say that, and it sounds provocative, is because it's a way that I think a lot of people are viewing it as their key to get rich.
Yeah, I mean, it's like I said. I mean, this thing is over 3 times as concentrated in the top 1% as the U.S. People always say we have a massive wealth problem. So, yeah, I mean, I'll say this. You have clowns in any movement. So, like, you don't want to look at a movement and base the argument against it off of what, like, Saylor says. because I like listening to Sailor and laughing at him because he says stuff that's just like so outrageous. Like when he was comparing Bitcoin to property in Manhattan, and there's like no, and he was saying, why, people were saying, why are you taking on debt to buy Bitcoin? He goes, why are people taking on debt to buy property in Manhattan? I'm like, because I can rent out the property.
Yep.
But the Bitcoin bull narrative has changed, which to me tells me that there's never really been a strong one. Because for a while it was a currency. And when it failed to be a currency, people changed it to a store of value. Have you noticed that?
Yes.
Yeah, it is funny though that they narrowed down because store of value is one of the definitions or textbook definitions of what makes a good currency a good currency.
Right.
So that's funny.
And so, I mean, sorry. With Bitcoin, here's the reality. I don't personally see any economic value ever coming from Bitcoin. I don't think it's possible. Like, I don't know how you create economic value. I mean, I'm sure there's a way. I am sure there's a way. But the price of Bitcoin could continue to just go up. The concentration that it has and the amount of players that are buying it, it may not even matter. Like if you're going off as on a price, like will the price continue to go up? Maybe. I mean, it's so concentrated in the top 1%, and that top 1% keeps on buying it and driving up the price. So,
and that's how it perpetuates itself. It needs to convince other people to be the next demand to keep pushing the price up, because that's all it's based off of, is that someone else will buy it for more.
Right.
So it grows and it can grow in price and keep growing in price if they just keep going to others and then bringing them into the fold, so to speak. So
I like Zastar's comment. The year's 2032 and the U.S. adopted BTC as its main currency. On realizing two people now own all the U.S. through BTC, the U.S. starts, is it Butlerian?
Butlerian
jihad versus the thinking machines.
Because it's a reference to Dune. Good old Lisan al-Gaib.
Lisan al-Gaib.
Yeah.
And I don't want to get too down. I mean, you can go down a Bitcoin cryptocurrency rabbit hole for hours and just going through like different things and going back and forth. But I don't know if you guys wanted to keep talking about it. I think one thing, Mark Melcher made a really good point because he was talking about tulips. Because people always call Bitcoin like tulip bulbs. And I like him because he said, no, Bitcoin's not tulip bulbs. The meme coins are tulip bulbs. He's like, you can't, I just like how he talks. He's like, you can't tell me that there's any economic value in fart coin. He's like, I mean, you got, and I've never heard him say that, you got to be fucking kidding me. Like, and I was like, oh, that's pretty funny. But like, that's the tulips for sure. I mean, and I think people that are buying meme coins know it's just that. So I think, yeah, I don't have any, I don't personally place any value in cryptocurrency. It doesn't mean it can't keep going up. All it needs to go up is for more people to buy it.
It just needs someone to say, I'll pay this amount more than the last price, the last quota price.
No,
That's
here's the issue. Because it doesn't have cash flow, because it doesn't do anything economically. It does nothing economically. There's nothing preventing it from going the other way too if confidence is broken. And you've seen that. That's why Bitcoin has winters. That's why it goes so hard on technical analysis.
Yeah.
Got something?
No, I was just reading Ben's comment.
Oh, okay. Yeah, because
Um,
I do have a one bit of relative nuance that I've stumbled across.
What's that?
That would be if anyone were to be a mad lad and be like, I'm gonna take a stand, plant my flag in the ground, and I'm going to, have some sort of bearish expression on MSTR. Or if you're one of those people that's like, I see the wave, I'm going to ride the wave, but I'm going to be smart man, go long Bitcoin and hedge it by like having some sort of short or bearish position on
Oh,
MSTR.
that is a widowmaker trade in the
Yeah,
making.
yeah. I would say don't to any of those, or at least I would caution some nuance, because it would appear that MSTR, good old Michael Saylor, has gotten his gotten his vehicle to just the right size where there's enough volatility and size, obviously, that vol traders and funds will play around in that space. Now, yes, it probably MSTR probably will go down at some point, but the get enough flows and funds to, like playing around in something. It's just something where I know I'm the sucker at that poker table. And if you really know what you're doing, good on you. But I know my limits.
Here's the other thing I'll say, and this is I'll wrap this up on cryptocurrency, and then
Mhm.
maybe we can maybe we'll do like 2024 and review at another point, or 2025 outlook. But although we kind of touched on, anyways, my problem is you can trade, I think, this stuff really well. I'm a terrible trader on something that I don't think actually has that. Like I can usually trade by saying like, I think it's got good value here. It looks a little maybe like oversold. Okay, I can maybe do that, trade in and out. If there's something that I don't deem valuable and I'm trading purely on like it's going up, buy, it's going down, sell before it goes down more, I'm terrible. It's so not my game. But that's it. And then retail confidence. Oh, go ahead, Fabio.
Well, wait, there's actually this comment here. Hold on. Okay, printer is infinite. So is stock issuance. You can mine more gold. There is only one thing that is finite supply. There's only one thing with a finite supply. Yeah, but that doesn't mean the thing with the finite supply has any value in and of itself. It doesn't
I mean,
prove
I
value.
tell you what, I can go make 2 poop turds right now, and no one will ever, those will just be the only poop turds ever made. There's only 2 of them. Finite supply.
No.
You want them? No. Also, from a currency perspective, a finite supply is terrible. You don't want a finite supply. Mark Meldrum had a great discussion on this, I thought. Did you listen to that, Fabio?
No, but I think we share a lot of the same views on currency.
So-
and I found out recently he has the same views on the Fed. So I was like,
Yeah. I would like to have him. I bet you he's really big. I don't know how big his, but so the printer, if you're referring to the Fed, doesn't exist. Currency is not made at the Fed. Currency is made by you. So if you say that printing money or making, we'll say printing money, right? Expanding the M2 supply, basically. I guess that's how you would define it.
Hmm.
That doesn't happen at the Fed. All the Fed does is make reserves that banks can then use when they have the demand for it. That's all they do.
I have old videos on this, so I'm very happy to.
So
We've been here before.
So
Mhm.
we have been here before. So I have learned from Fabio. So the way money is made is when you take a loan to buy a house. You're making money. You're the one that's contributing to the increase in the M2 supply. Because the Federal Reserve is giving the banknotes so that people can borrow it. But how is money made? Money is created when there's a demand for it. Well, how is there demand for it? And when you talk about fractional reserve banking, you get a loan for a house, you're increasing demand for money supply and therefore increasing the demand for loans, which then creates money.
And just for one thing in there, all this can also, just as it rubber bands out, it can dangerously contract back in, which we don't want that. But let's say everyone just pays off all the debt.
Yeah,
that's how you get that. So you actually also don't want that. But we haven't seen that really. Japan is an example of when that starts to show up, and then you see that just like contraction in the supply. So that's why it's like, don't kid yourself for a moment that you can't see deflation in the United States. Oh yes, you could. Like that can happen, and I know that boggles the mind because it breaks the misconception that everyone already believes and concludes that that's reality. It's that, you know, there's a simple printer and people go brr, and then money just comes out.
And Ben, I just want to address this. The Fed has no control over this.
None.
They can't control. And here's the thing too. It's a good thing that this can happen, because imagine if we couldn't get loans. Imagine if you couldn't get a house loan and you had to pay for a house in cash. Or if that we had such a currency restriction that in order to get a house loan, you had to put 50% down or 60% down. So generally, if the money supply is increasing, standard of life is increasing, I would say. Now, maybe some people should be putting less money on their credit cards.
There are countries that can print money, but the United States is not one of them.
Yes. Real money printing, Venezuela, was that right?
Venezuela.
That was real money printing.
Venezuela, Zimbabwe, our countries.
But we're talking about the Fed right now, and the Fed is in how it relates to the U.S. So when you look at what's going on in the U.S., and it's why I don't understand why people think that having a finite currency is a good thing. It's a terrible thing. If you have a finite supply of currency, you can't make loans. I mean, think about this, Fabio. If there was only 21 million US dollars, what would be the requirement to get a loan in the US?
Impossible.
It'd be impossible. Like
impossible. All the poor people, you wouldn't get anything. Only the top.
It would be a barter economy, more or less.
Yeah. And
or
so,
like collateralized loans. Like I will borrow you my shovel.
And what would happen, and this is what happened in France before the French Revolution, right? Is that the top 1% would hoard everything. Now people would say, oh, the top 1% controls everything already. And that's why my point is, Bitcoin, the top 1%, is like over 3 times as concentrated as the US is today. And so I just don't understand. I don't know where the value comes from by having a finite supply. I think that's been an argument that's been put out that I think some people put out in a very good way that's maybe not been the most, in my opinion, like accurate. Like you put out an argument out in a way that says it's a finite supply, money printing is bad, look at inflation, this is a bad thing. And they don't really give the context of why, one, like you said, currency shouldn't be used to get rich. It should be used to transact. And so...
But this next comment also ignores some things. Like the Fed can't have... So the Fed, any surplus goes to the federal government, and any deficit is then funded by the federal government. And the treasuries itself that it exchanges for reserves that you're describing, the balancing transaction, can't be created by themselves. So the creation event cannot happen at the Fed. Because if I can only make something if Andrew has something, then I'm not making something out of thin air. There is a prerequisite to the creation of this token, which is what the reserve, let's call it reserve token, if you want to call it that, is. And in this case, let's say it's every time Andrew has I don't want to use the same example of your poop, so I'll just do something else.
I was kind of being
A diaper. Every time Andrew changes a diaper, I can create a Fabio token.
Dude, that is inflation to the max. I changed diaper. That's a
Okay.
bad.
So Andrew keeps changing diapers, and he keeps getting new diapers, and then I can create these Fabio tokens. And then you look at that, and you're like, oh, Fabio is creating Fabio tokens. No, that's not. So if kind of getting to that point, so the creation event isn't even happening at me. I'm not the level of creation. It's happening somewhere else. And in this case, it's Andrew. Andrew is there's an interaction going on there that is creating the item, right?
So-
and then I am creating a representation of that item. And then that token can then be used by, let's say, I don't know, this is getting weirder, but now, Andrew can exchange with Bacon, and then they can exchange diapers, right?
Oh no, yo,
So
we're
here's-
going like second level here. We're going derivatives contracts.
Okay.
Derivatives
Here's what I would say is an easier example than any of this.
Yeah,
Because I think a lot of people say right now this is all funded by the deficit, right? But M2 money supply expanded when the U.S. government, the federal government, was at a surplus in 2000.
Yes.
So the deficit's irrelevant. Like, if you look at, and I can share my screen.
Thank you. And we're going to get into one of my favorite topics that I love ranting about, but continue. I want to know if Bacon can guess it. I love
here,
rebalance timing luck.
No, that's
I know.
So here, just from Fred, here's M2 money supply. It's been on a steady state up, and look, in 2000, all through Bill Clinton's presidency, which was 96 to 2000, and he balanced the budget. I think the U.S. government was at a surplus. Several times in this, the U.S. government was at a surplus. So, if they're at a surplus, why would the money supply go up? It's because demand wasn't coming from the government; it was coming from the expanding population and the improving quality of life of the people.
Yeah. The only case, and this is what I love ranting about, and I don't know if since you watched him, if he talked about this, but the one thing you might argue is like the crowding out effect. That's the one thing you might have an argument for that could be like unhealthy longer term, and that is problematic about the deficit. Because okay, so here's where it kind of stems from. We don't know what the capacity is really. We have estimates. Or maybe someone has a good guess out there, like what the true capacity is. But we probably theorize that it's like in any given year, like the true loan output capacity is not infinite. There is some sort of a limitation. And then so depending on where the supply of loans are coming from, you can have what we can say this crowding out effect, where banks will always tend to go for primarily, above all, the best credit risk, right? They care more for the certainty of return of capital and then plus interest, and they'll forego the higher gain if they can get the surety of it, because all interest, excess interest is, and we can call that fool's yield when we get too high, is just the compensation for the risk. A lot of people complain about credit card interest rates. Well, credit card interest rates is because it's uncollateralized loans.
Mm-hmm.
So go cry me a river. You want to have access to that money. Well, you got to understand that on the other side, the other party's taking on a huge risk by giving you that money. And so that's something you wouldn't do to random people. That'd be insane. So the only way that makes sense is on a larger scale and a systematic approach. You're getting compensated for that risk, i.e. through a higher interest rate. And then with we go down the list, mortgages, you have a collateral, even have mortgage insurance, and then you go down to the bottom of the risk curve, and that's government debt. So if you have a huge supply of government debt, and this is not certain, this is like a theory, just like any other theory, but there could be an argument that if there's too much availability or supply, that it crowds out debt that would have otherwise gone to the private market. Now, some people actually, and I'll point a counter argument that I often hear that's also equally as valid, is like, well, you want to be very careful about tactically because you don't know if you overextend it. So this is like the hard part. It's like we don't know these things. We have guesstimates, But if you shrink down the supply and let's say you start reducing a lot of the debt, you might also ignore the fact that this debt is actually used in collateralized transactions, and you might starve the system of a lot of liquidity. So that perfect balance is also unknown. Of like, let's say you say, oh, I don't want to crowd out the private markets, so I'm going to, reduce it by this much, and I'm this government official. You give me all the power, and I'm like, we're going to get it down by half. I might cause something horrible to happen because I didn't plan for the fact that the whole system relies on these pristine collateral assets to then be used in these very complex organizational transactions among entities around the world.
So you're talking about like the Eurodollar system? And
yes, and that.
I mean, I'm just trying to make sure I'm following correctly. And all of these others, petrodollar, all these things, that if we drive the liquidity, people are like, wait a minute, there's no money to give you a loan. Like the money we have, there's this money that's circling around in the thing about being a global reserve currency. And actually, I just saw yesterday, US dollar as a percentage of international transactions is the highest it's ever been.
It's even stronger than ever. Yeah.
Yeah, which people have always said like, oh, it's gonna go away, BRICS and China, but so you're the currency that people are operating in.
Yep.
And if you take that away, well, what happens to the system? And that's kind of the agreement that the U.S. made when they went on the petrodollar system, right? The U.S. said we'll be the global reserve currency, and the unspoken agreement is, well, you have to have enough dollars to be the global reserve currency. So, but that's your favorite thing to go on about?
Yes, that the one argument you may have about deficit spending being excessive is the crowding out effect. But like we can't measure the effect. It's difficult. It's like malinvestment, where you have no idea what the cost is of malinvestment. You kind of get an idea of it once it blows up, but you don't know in the moment. So you have like all these, let's say, you do all these welfare programs, and the welfare programs don't lead to any productive return on society. We can chuck that in as malinvestment, and then that malinvestment will build up over the years, and it can take a very long time. It can almost take a whole generation for you to see the consequences of that malinvestment. It can take a very long time. So that's really hard to measure. How do you tell someone in the moment that policy is wrong?
Right. You can't.
You can't.
This is macro versus micro type of.
Yeah. Anyways, on to the next.
We yapped. Sorry. I like talking about this stuff though. I find it interesting. And I will say, like I was saying this, Mark Meldrum and Fabio's talked about this. I've had discussions with him at length. I thought Mark also did a very good job. If you want to kind of listen to it, he had one that was like towards Bitcoin, and I think he talks about this topic somewhat. And then in his recent weekly call, he talks about it again. So if you don't, if you haven't ever listened to Mark Meldrum, awesome, like really great academic stuff. So go listen to that. Okay. Here we're going for an hour and 40. So here's my question to both of you.
Hopefully I have an answer.
You got to pick one stock for 2025.
No.
Put 100% of your port into it.
Oh, no.
What are you picking?
One stock, you say?
Uh-huh.
Oh, you're going to hate my answer.
I'm going to hate your answer?
Oh, and let's make it fun because, the cop-out answer is you go, index fund.
No, stock.
Stock.
Company stock. Yeah, I agree, Fabio.
Yeah.
Sad.
I agree.
It's very sad.
I'm seeing Moo. What is Moo?
Yeah, Vanek.
Agribusiness.
Yeah.
Ain't it for Andrew? No. Okay. Let me just. Number one stock. I don't even know.
You don't even know.
It's gotta be if you're going 100% on one stock, you gotta go mega cap. I feel like, or you gotta go stock that you think is low risk of blowing up. I should say. Yes.
Well, we could make it even more entertaining by saying no mega caps. Nothing above
That's
50
really-
bill.
Oh, 50
Ooh.
bill.
I like
Ooh.
this. Okay.
Ooh, that's
Because like,
dirty.
easily, yeah, you could go with.
Dirty.
Wait, are you talking about has to outperform in 2025, or just like you would want to buy it in 2025 to add to the collection, and then kind of just sit on it?
Okay.
Oh,
So we
that's
have
dirty.
two scenarios. One is you have to put 100% of your port into one stock.
100%. Okay.
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 Second is what you just said. Basically, what's the stock that you want to buy? MSTR, and then Stabulo saying MPW.
No. So, and sorry, Stabulo, I do this with utmost, respect. MPW.
Is FICO actually technically under 50 billion?
All right, because FICO,
From
we're
the
going to call this the FICO amendment, because in honor of FICO, under 40 billion.
Oh,
So I kicked out
Dude,
FICO.
if it wasn't for the sell-off today, FICO would have been above it.
Yeah. But we're going to call it the FICO amendment to kick out FICO from the options.
What is NTR? Nutrient? I don't. Oh, it's Canadian.
I hate this.
Okay.
So under 40.
Under 40 billion.
Freaking hell.
So we've eliminated a lot of high quality
Yeah.
companies.
No kidding.
Crocs, fuck it.
I was tempted, but like the more I think about it, I'm like, no.
And no repeats. So if one
no
of you
repeats,
takes
so no
ones,
Crocs.
then
Okay. All right.
No, but you guys can take Crocs. I'm not saying one. It's the panel. Panel cannot repeat, so I can't take yours.
No, I understand. I'm just looking at my.
I'll let Bacon go first. I'll go last in honor.
Sorry, I'm just looking at my.
I'm looking at the list and it doesn't seem compelling.
No, but you have to.
I
Yeah,
know.
we
Just
didn't say-
like, what am I gonna do?
If you
Plow my
don't-
money into Hewlett Packard Enterprise?
If you don't, you're gonna get kneecapped.
I will come for your knees.
Yeah. So that's like what's on the line.
All right. God. Humana? Yeah, no thank you. I mean, SIBO's on the list.
I have a few off the top of my head that I would do.
Yeah.
I'm not gonna be what Andrew was saying. It's like, the one that's not gonna blow up.
Ulta's there.
I'll go for the one that that could kill it, but higher risk. Won't be boring.
Under 40 billion, you said?
Under 40.
Oh,
Did I just kick out one of your stocks?
I was thinking Coupang. It's 40.5 billion.
Get dunked on.
Okay.
That arbitrary 40.
We'll call it the Coupang amendment with the FICO amendment.
Okay.
So below 48 billion. Now Coupang is allowed. If you want Coupang.
All right. I was just looking. I was
go
like,
ahead,
Coupang
Andrew.
sounds interesting.
Go ahead and take Coupang.
Well, hold on.
You're allowed to say Coupang because you really wanted.
Yeah.
No, I mean, I was just looking. Hold on.
I just wanted to kick out FICO.
I mean, like there are some like. Oh wait, no, never mind. I scrolled back up too far. I was like Uber. I'm like, wait a minute. No.
Look, I'm seeing some great tickers being thrown out by the audience.
Let's see.
A few of those, I think have
Builder,
a shot.
Toast is good. Builder.
Toast's a little stretched. Toast's a little stretched, but I love the company. Well,
with the Coupang thing, Constellation Brands is then on the table. I think, maybe.
No. Oh, sorry. I've seen Constellation Software, Constellation Brands. So you're looking at alcohol. Okay.
Yeah. Maybe.
You want to go for them?
No,
yeah.
I don't. But no, I'm investing in people that get drunk.
Fair enough.
It's difference.
I think I've nailed it down which one I'm gonna pick, but
yeah. Go ahead, you guys.
No. I want to wait last. I want to. But if you really insist, I'll go first.
Yeah, you guys can go ahead.
So I think for the one I chose, I didn't want to go with one of the ones off the top of my head in like the more secure side.
Mm-hmm.
Mhm.
I decided to be a little more fun with it and say one that I think won't even be public for that long, anyways.
Oh,
Yeah. So literally, I think it is just like a 2025 play, and then it's gone. Maybe 2026 I'll survive. Talon.
Talon.
Talent Energy, TLN.
Yeah. Talon Energy.
All right,
Go ahead and pull up
That
their
is-
ticker.
that is spicy.
I chose to be. I wanted a spicy one.
Okay. Well, you're up 2% after 3% after hours, and probably 2 shares. All right, so you went with Talon.
Mhm.
Below Talon is small. It's real small there.
While you're thinking about your stocks, I'll tell the audience what I like about it, why I did it into the picks. So for full disclosure, I think it should be safe to say if we mention these stocks, we're probably long these stocks, but so I am long Talon Energy.
Hmm.
And one of the things, to like about it, I think that in 2025, a lot of the themes that it benefits from are still in play, still excited. You have a couple catalysts, one of them, the big one being in the summer. You have continued negotiations going on with Amazon and the regulatory authorities. You do also have an underleveraged business with, let's call it crown jewel asset. Basically, when you to the valuation of the business, it comes out to potentially that the crown jewel asset could be maybe worth more than the current market cap. The underleveraged component of the business does kind of put it in a attractive position to get acquired and then levered up. And if they don't get acquired in the meantime, it's perfectly reasonable for them to take on debt and even just repurchase shares. And as long as they follow the strategy and playbook of no purchasing of new assets and just focusing on share buybacks, I think you're in business. The moment they start to get a little cute and think about buying another new asset, I'd probably say, joking, well, it's not a joke, but thesis broken, maybe look for the door, because here it's just about how much cash can they produce from those assets, return it to shareholders. And given the valuation and the demand for these assets, buyout is not, I'd say, impossible at all. In fact, I'd say it's very likely. Could happen in 2025. That's why I threw it as a pick. Wanted to give it a little, spice to the pick instead of just. There was another one I could have easily gone with. If you wanted to secure that, I think you guys know.
No, there's plenty of actually like good names with especially with the amendment, like the second amendment that you just added.
Yeah. I wanted to make sure we didn't go for like, Google.
Yeah, it's boring. It's boring. Okay.
Yep,
So
go ahead.
I have 2.
Oh, wait. Okay? That's not fair.
Listen,
I only had one.
let me tell you my 2, and then I think you'll be like, fine, that's fair. So the first one is okay. Small market cap, a small-ish. I mean, it's not. No, it's almost 10 billion. 9. It's about the same size as Talent, actually. But it's a company that I think has pretty solid. Because I'm doing the same thing. We're going to be fun here. I think they're going to have a tick up in revenues. I think they're buying back stock. I think they're still pretty cheap here. And that's Allison.
Oh,
that's
very
good.
nice.
Okay, I like
It's
that.
Allison Transmission,
Mhm.
which is a company I have been long for some time. It's been a good year. But and then the second one, I don't really know much about them, but my mentor said that they're good, so I'm going to go with BlackBerry.
Wait, really? Oh, wait, you're trolling, aren't you?
Yeah.
Yeah. I think I got the reference.
Okay. I'm trolling on. I do own Allison, like I said.
Mhm.
BlackBerry, I do not.
Yeah, see, the audience must love that I made those rules because
Yeah, because those be like Google, Amazon, Microsoft. Oh, I'm gonna be
well,
spicy.
there were plenty of others than in the medium cap size, but
Yeah.
all right, Bacon. If you don't pick the one I'm thinking of, I will be disappointed, and it will confirm my suspicions on you.
Okay, not advice, of course. Just to shut Fabio up. Crocs, but
No.
no,
What was the original one?
no,
I don't.
no.
Was that
It's
your?
Crocs, but there's also some like really good candidates like
I was gonna make those.
SIBO deserves an honorable mention of at least
Dude, Crocs.
probably being
Wait,
worthy on
pause.
the radar.
Pause.
Yeah.
Crocs and Allison have the exact same share price today.
That's funny.
Wait,
That's
what?
very funny.
So Crocs is 106.85, Allison 106.85.
It's also probably sad if you compare the charts. but yeah. No, like there's a lot of like good just if you want to be lazy and be like with the market cap rules of companies and the S&P you know GE Healthcare is maybe if you think you know something in that space could be something, probably not going to zero. What's another one? Deckers could be exciting because between them and what was it? Anon.
On.
Yeah, like those two seem to be going
All right.
places.
You're throwing out tickers. Hold on here.
Did Deckers do a stock split?
Yes, they did.
Yeah.
You said
Yep.
Anon.
Yep. No, like I'm just mentioning honorable mentions though, as far as like Huntington Ingalls also. Like fair disclosure, I have a small position.
All right, if you're gonna start throwing tickers out, I also agree with Seymour
Mm-hmm.
Duck right here. Evolution Gaming,
Yeah.
if we're gonna throw out, Evolution.
Isn't that above the market cap?
No,
I wanted to say BTI, but the market is too big.
It's way. I guess SEK is a lot weaker than I thought.
Yeah, Evo is look at that.
Yeah.
And this stock, you know what?
What?
Oh man, that for me, because I'm also long Evo. Are you guys, any of you guys long Evo?
No.
That is like another, I guess, fun candidate for my pick.
Mm-hmm.
If I get a close second.
Yeah, I don't think there's anything wrong with like honorable mentions.
This is a really ugly chart.
It is.
But
hey, Andrew,
the fundamental business.
They're doing something about it.
Exploiting children.
The children yearn for the gambling minds.
I will tell Lecker Lad.
No, don't.
I will tell on you.
Don't. No, Dad, please don't tell.
I will tell him you're being mean. He's will not be happy.
He's gonna bring up IWG, and I'll be sad.
Yeah. Oh wait, was it? Oh shoot, hold on. I forget. Was this one? Yeah, Las Vegas Sands. Shout out Leo. Shout out Glasses Cat. I want to say that was a Leo pitch, and I want to say that fits under the rules.
LVS.
I thought he did Red Rocks Resort.
Yeah,
oh no, yeah, he did Red Rock. Yeah, never mind. My bad.
Dude,
sorry, Leo. I failed you.
They were doing well for a while. I thought
they were doing well for a while. I mean, but everything died. But also Red Rock trades at probably one of the higher multiples. But they are more like a real estate play.
Yeah.
With a operating component because they own 100% of the real estate versus a lot of the other casinos are now pretty asset light. Just to throw it in there, maybe Yeah, staying within the rules. We already mentioned Crocs.
Yeah.
You know what? I'll just say the safety one. I pitched it on Chit Chat Stocks. The Barely Insurance Co.
Yeah.
Oh, yeah.
How much are they up year to date now?
22%.
So they are just at market performance now.
Or underperforming? Yeah, a lot of
I think
people are saying
after
Elf.
today.
Oh, that's right, because it's a day.
Oh,
Yeah.
hey. Ingalls market, maybe. Wouldn't that be funny if they keep going back down again? I think that'd be funny. As a shareholder of Ingalls.
I wonder why they have that one there.
Yeah, Tractor Supply, Julius Caesar, for sure. Yeah, that's definitely
Dirty
deserves.
Dan.
Yep.
All right.
Yeah. Plenty of interesting names, and plenty of names I don't think would go to zero, like Dow Chemical.
Oh, you're going into like the dumpster?
Well,
Yeah,
I
you
mean,
have
it's
Dow, you have LYB.
like
Celanese?
I will
You
tell
wanted
you
the
one.
dumpster?
Celanese. No. Wait. Celanese, hold on. With Celanese, you do have a debt problem.
Yeah, but you said you want to go in the dumpster.
No, but look, there's their peers that are also in the dumpster. It's not that they're not at the bottom of the dumpster.
Oh, if we
Celanese
want to
is
go
at
in the
the bottom.
dumpster, if we want to go in like the deep dumpster, like this company, what a freaking dumpster.
Pharma, he's asleep. He's not watching right now.
He might watch it for the replay.
He does
tonight.
not. He does not watch the replays.
DKTX tonight.
So you know what? We can make fun of him all we want right now because he won't see this.
Oh, okay.
DKTX tonight.
Yeah.
Um,
I'll tell you one though that I'm really interested in as from a 10K perspective
what?
for next year, or calendar year rather. Archer Daniels Midland, ADM.
Watching that development. Okay, so
Yeah,
we're
I
deviating
really
far from the, but I like it.
I
agree.
really want to look into that one. Like if they
Is it the Post family that wants to buy them?
Oh really? They have a prospective buyer in line?
Or am I thinking? No, I'm thinking Lamb Weston.
Oh, okay. Yeah.
Lamb Weston got a. If you look at, they got a pop
Oh.
here.
Yeah.
Oh, I can do a quick victory lap on FMC Corp because there was a lot of clapback comments, and I'm waiting on this to cook some more. But yeah, I made a video saying the risks do not outweigh the reward.
Yep. If you look at total return, it's a little bit better.
Dividend.
Anyways, no.
Oh, but yeah. I like people. If you do want to try and quote unquote front run me on Archer Daniels Midland, don't come yelling at me if it doesn't work out because their previous 10K was ugly from adverse opinion on internal controls, and it played out this year. So we'll see if the company's able to remedy those problems. Shipping company or the cruise lines. Norwegian, I think, fits the rule of the game.
Well, no,
I
it's
don't know about
Carnival
Royal.
small enough.
Yeah, and
Royal's the one that can't
Yeah.
fit the rule.
Yeah.
I didn't realize Royal was that much bigger. Wow.
Yeah.
Now it is. ZBRA, Zebra Technologies.
Oh my gosh, what's going on with Zebra?
They were a winner.
Oh, we talk about these guys a lot. We said,
Yeah.
oh well.
We should have just held it. You see, we make mistakes. We didn't
I
hold
don't
this
know.
one.
I mean, I'm sure
Well,
there's
we did
stuff
buy
in
other
port.
things that probably.
My
did
port
better
was up more than
60,
this year, although I don't know if that's. Stabula says he'll go with SoFi. Winner.
Can't go
Yeah,
wrong.
Does fit the rules of market cap.
Grab, because you can't pick Uber. You can pick Grab
Yep.
though.
Yep, you can.
Hope you guys are
probably
seeing.
be like,
There's a lot of company opportunities
Oh, yeah,
in
yeah.
the smaller-ish market caps.
Mhm.
I was telling people that back when these were super cheap, you could have looked at the grab warrants.
Yep,
Oh well.
a leveraged play on grab.
Yeah.
I think. Who else can we?
Trickster Monkey Thursday. Is that what they call it? That's an awesome name. Playboy's still around? They were like trying to do like NFT stuff. I figured that didn't work out well for them.
Let me see how this small cap healthcare equipment company I always follow has been. Oh my gosh, yeah, they just killed it this year.
Vici. I don't know if I want to go into REITs.
Yeah, I was gonna say, do people like Alexandria? I think they fit the bill for the rules.
Oh,
You know who just now fits the bill for the rules right now?
What? Who?
Realty Income. After today, they're in.
How the mighty fall sometimes.
Yeah.
Kraken Robotics. Oh yeah, that's a throwback.
That is a throwback.
Remember when it was McBuda and Ocean? I guess that worked out.
Yep.
They're talking about like right there. I think it was in 2022, wasn't it?
Yeah, it was early days of.
Very early.
Yeah.
Oh.
Yep.
They found a winner.
That they did. Hopefully, they held on, or have been able to monetize in a good way.
Yeah. Man, good times 2022.
These are the ADRs. I can't even play in that. What's the market cap? And what was the
what?
market cap back then for Kraken?
It was probably well, let's just do this. Let's just pick 30 cents. So hello, Miss Tilly. So we're gonna do 30. Oops.
What I'm trying to get at is probably I think I tried to get shares and like liquidity was such an annoyance, an issue.
You're
And
cheating.
113 million
Well,
Canadian,
thank
so probably
you,
like 80
Bacon.
million, probably like 80 million American or something like that.
80 million. Yeah, you see, like I could. Yeah.
So you're like, I could buy the whole thing.
No,
Yeah,
no.
the volume and liquidity on that. Like you would have had to have eased into that one like bit by bit in a annoying way.
It would have been also horrifying. Well, I tried to buy shares of like I think they're sitting at like 50 million Canadian market cap. I tried to buy shares of it, but I'm not going to say their name because I don't know.
Yeah, it's fine.
But I don't own it, so it doesn't matter. And I think covered. We just threw out a bunch of names.
All right. Well, anything else before we head off here?
No, I think we're good.
All right. Well, Fabio, I'll let you do the outro.
All right. With that being said, thank you guys so much for joining us here today on the Capital Mindset Live. If you guys are interested in joining the Capital Mindset Club, the link will be in the description below. It's not currently on there, but I'll be posting it a couple seconds after we end the show. Or you can just find it in the older videos. Other than that, we'll try to see you guys. Well, I don't know. We're probably going to be on vacation all next week, but maybe we see each other New Year's or afterwards. But if we don't, all right, we'll see you guys.
We'll figure it out.
Yeah,
we'll be around.
We'll figure it out. All right. Good night, guys.
We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.